Hey everyone, this is Kevin the Apptrepreneur, and Uber and Lyft have been in many wars. They have been in the war for rideshare. They have been in the war for autonomous vehicles. They are in the war for who looks better. Spoiler alert, it's always been Lyft by a very, very, very wide margin. I know drivers don't like them, but, in terms of public perception, Lyft always looks a little bit better than Uber. I'm sorry, that's just a fact. Well, they're going to get into a new war, and it's not the war of flying vehicles. Lyft might want to fight them with the scooters, but the flying cars, they probably just think is stupid. No, it's the war for an IPO, because Lyft has hired an IPO advisor a few days ago, and they have even announced that they are planning an IPO very soon, which is something that they had not been talking about for a while. But they might be in a better position to actually have that because, unlike Uber, they're pretty close to being profitable. Not yet, mind you, but pretty close. Now, according to the New York Post, Lyft is reportedly racing to beat Uber to the public markets, targeting an initial public offering for next spring. The ride-hailing app has hired IPO advisor Class V Group to work with the management through the process and plans to begin accepting pitches from banks as soon as next month, according to Bloomberg. Lyft is angling to launch an IPO in March or April, sources familiar with the matter said. In May, Dara Khosrowshahi, Uber's chief executive, said his company is targeting an IPO for the second half of 2019. So if Lyft got the IPO up in March, they would beat Uber to the punch. At a conference in July, he said that his vision for taking Uber public includes turning cash flow positive. Quote, I don't want to be dependent on private, public, or any market to fund the business expansion in front of us. But over a period of time, it is absolutely important for the business to be profitable, which is true. It is true. Any business needs to be profitable in the long run. Just ask MoviePass, my one investment that's like the most volatile. I have such a great portfolio, and then I have MoviePass in there, anyway. An IPO for Lyft would amplify Uber's troubles. For one, it would allow Lyft to snatch up capital that might otherwise have gone to its arch rival. Lyft in June raised $600 million in its most recent funding round, led by Fidelity Management, doubling its valuation to $15.1 billion in a little over a year. The Wall Street heavyweight Carl Icahn took a $100 million stake in the company in 2015. Uber, meanwhile, this week received a $500 million investment from Toyota at a valuation of $72 billion. Lyft operates in roughly the same number of U.S. cities as rival Uber. In May, Lyft released internal market share numbers saying that it had captured 35% of the U.S. ride share market, up 15 points from 18 months prior. And you see, that's actually interesting because even though Uber is shown to be the number one, this is where they could create real problems for Uber. Because Uber is worth $72 billion. Lyft is worth $15 billion. But Uber's number just got to $72 billion. It was stuck at $64 billion for a couple of years, and they're losing fists over fists of money. Lyft is still losing money, but it's been catching up very, very slowly, and it's almost profitable, and they're showing tremendous growth. So that's one of the things that Wall Street will look at. Who's actually growing and who's making money. And if Lyft can actually show that they are just a little bit profitable by the time they go IPO, then they could completely wipe out Uber's dream IPO, where, yes, Uber can still have one. I'm not saying they're not, but it might be even less than what they expected. Continuing. But third-party analyst Second Measure estimates Lyft has a 27% market share, while Uber holds 73%. Lyft has been able to increase growth over the past year thanks to a series of scandals that plagued Uber in 2017. The rise of the #Delete Uber movement culminated in the ouster of CEO Travis Kalanick. Kalanick has gained a bad boy reputation, frequently flouting regulations as he aggressively expanded the company. Lyft founder Logan Green, meanwhile, started his company with the idea of resolving an urban transportation crisis in the U.S. Uber has since been on a year-long apology tour under the company's new CEO, Khosrowshahi, to move forward. Now, let's talk about tech giants going to IPO, because I actually kind of lived through this. Remember years ago when it was a big deal that Facebook was going public? I don't think a social media company had gone public. Maybe MySpace did, but I think MySpace was just bought out by Fox and then ultimately sold by Fox to Justin Timberlake. Yeah, Justin Timberlake owns MySpace now. That's a crazy thought. But it was a big deal because it was like, will people actually buy stock in Facebook? And for a while, the answer was no. I didn't buy it on day one, but I remember like a few weeks later, the stock got down to like $12 or something, or 15, something like that. It was fairly low when I bought some shares because I figured Facebook wasn't going away. But for a while, it looked like Facebook was not as valuable as people thought it was. And then at some point, it did get to be very, very popular. I think it's like at $178 a share now. That's definitely very, very good. But the lower than expected IPO resulted in Twitter, who was the big competitor to Facebook for some reason, because they're both called social networks, even though they do different things. I don't know. Technology is weird. Twitter decided to hold off on their IPO and wait a little while. And once Facebook started doing better, then they became public. I own stocks in both companies, by the way. I bought them both when they were fairly low, and they did grow at some point. But the Lyft IPO could create some problems for Uber should they go first. If they premiere first and they raise a lot of money, that means that investors are investing in Lyft who might have invested in Uber but now might not invest in Uber. That's risk number one. On the other hand, what if Lyft actually opens and it's like a Facebook and it opens at like say $20 and after a few weeks it's down to 14, then it's down to 9. It might go up at some point, but at that point Uber might, get cold feet about going IPO because, you just saw your main competitor do it and they got slaughtered on the stock market. So there is a real advantage and disadvantage to being first. Now, Uber wants to be first because, they're first at everything. And I think even Lyft will admit that, if you ask them privately and off the record and off camera, that they don't do anything original. They just do what Uber does. And this is essentially them doing monkey see, monkey do, except this is one of the rare times where Uber actually announced plans to do something long before they actually did it. So Lyft has a chance to jump on them and do it first. So if Lyft jumps Uber on this one, then, they could either have all the cards or they could have none of the cards. And that's what's going to make this very, very, very interesting. I don't know how much they're going to start at. I don't know how much they're going to raise. I'm going to suspect they're going to start modestly, maybe somewhere between $20 to $40 a share. And we'll see what happens. And my question now, of course, I'm passing off to you on this special Sunday edition of the episode that I didn't plan to record. You're welcome. What do you think? Do you think Lyft would do good in an IPO? Do you think they will beat Uber? Do you think Uber might even accelerate their plans for an IPO just to beat Lyft to the punch? What if they both launch on the same day? That would be interesting. That would be a very interesting story. I would love to know. So comment below, like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, but even as little as $1 a month goes a long way to helping the channel run smoothly. And as always, flame responsibly. Have a good one.